This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell in early trade on Thursday after Israel and Hamas agreed to the first phase of a plan to end the war in Gaza, weighing on oil's war risk premium and pushing investors to sell. Brent crude futures were down 51 cents, or 0.77%, at $65.74 a barrel by 0002 GMT. U.S. West Texas Intermediate crude fell 55 cents, or 0.88%, to $62. U.S. President Donald Trump said that Israel and Hamas had reached a long-sought deal for a Gaza ceasefire and hostage release under a plan for ending the two-year-old war in the Palestinian enclave.
U.S. crude oil stockpiles rose last week, while gasoline and distillate inventories fell as demand jumped, the Energy Information Administration said on Wednesday. Crude inventories rose by 3.7 million barrels to 420.3 million barrels in the week ended October 3, the AIA said, compared with analysts' expectations in a Reuters poll for a 1.9 million barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 763,000 barrels in the week, the EIA said.
Moving on to the top news in the energy sector.
European Union countries' ambassadors on Wednesday agreed to move ahead with the bloc's plan to end Russian oil and gas imports by 2028, EU diplomats said, clearing the law's first political hurdle before governments vote on it later this month. The EU is negotiating legal proposals to phase out Russian oil and gas by January 2028, attempting to deprive the Kremlin of revenues to fund its war in Ukraine. In a closed-door meeting on Wednesday, EU ambassadors agreed to forward the proposed law to their ministers for approval at a meeting on October 20, three diplomats told Reuters.
Britain's electricity and gas grid operators expect the country to have sufficient energy supplies this winter, despite tighter gas margins due to declining domestic production, they said in their respective winter outlooks on Thursday. Britain's National Energy System Operator and National Gas publish annual reports about the gas and electricity supply and demand picture for the coming winter to help businesses and government prepare. Only a rare combination of events, such as a very cold UK winter coinciding with a major supply disruption, would pose a material risk to our gas or electricity systems, Glenn Bryn Jacobson, Director of Energy Systems and Resilience at National Gas, said in its winter outlook. Next, we have the top news in metal markets. Silver prices shot to a record high on Wednesday, buoyed by gold's bull run and growing investor demand for hard assets amid persistent geopolitical and economic risks, as well as expectations of U.S. interest rate cuts. Spot silver hit an all-time high at $49.57 per ounce. Both a precious and industrial metal, silver has gained 70% so far this year, heading for its biggest annual growth since 2010. Gold, traditionally seen as a store of value during times of instability, surged past the $4,000 an ounce level for the first time on Wednesday, while copper briefly hit a 16-month peak.
China tightened its rare earth export controls on Thursday, expanding restrictions on processing technology, unauthorized overseas cooperation and spelling out its intention to limit exports to overseas defense and semiconductor users. Exports of technology used to mine and process rare earths or make the associated magnets is barred without permission, the Ministry of Commerce said in a statement. Many of these technologies are already restricted and it was not immediately clear what the new rules will add. China added several rare earths and related material to its export control list in April. However, Thursday's announcement explicitly said licenses are unlikely to be granted for defense companies as well as certain users in the semiconductor sector.
We will now look at the top news in the agricultural sector.
Chicago soybean futures held near three-week highs on Thursday amid expectations that U.S. harvest yields will be below the most recent government forecast and hopes that China will revive purchases from the United States. Corn futures rose slightly, with traders expecting a cut in yield forecast for the U.S. crop, while wheat recovered some ground after slipping towards five-year lows earlier in the week. The most active soybean contract on the Chicago Board of Trade was unchanged at $10.29 minus 1/2 a bushel by 0042 GMT. Earlier in the session, it touched $10.30, the highest level since September 19, first touched on Wednesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.